How's it going, traders? It's the Papa Wall Street back with another weekend review. Today we're going to look at my top sectors and top tech charts going into next week. If you enjoy my content, make sure to like this video and subscribe to my channel below. These two actions will help more people see my work. Also, don't forget to hit the notification bell so you know when my videos come out. And if you have any questions, please leave a comment down below. Let me know what you think about these chart videos. And lastly, keep in mind, this is not financial advice. I'm doing this for educational purposes only. So let's dig into these charts. All right, first up, we got the DIA, which is our Dow Jones Industrial Average. And you can see we had an inverted hammer 2 weeks ago. Last week, we have a spinning top, just showing indecision in the market. The only thing really to note, we did close under the 200 SMA, and we closed under the 382 Fibonacci retracement. And as we'll see in the SPY and Q charts, this was the only sector or indice that did close green last week. So, but keep in mind this is only 30 names that are comprised of the DIA. So, if we continue to break down, then I'm looking at 283 and 275 as my targets to the downside. Okay, next up is the SPY. And you can see we did close under our 200 SMA, another spinning top from last week with that inverted hammer. The previous week, we did close above the 2018 anchored VWAP low. So what I would say, under 249.17, that's our 50% retrace. We did look for a potential bounce on that level last week. We got it. But now what I'm thinking, if the market is still going to act continually bad, this is probably a pretty good short down to 318.29, and that I would say would happen over time, maybe a couple of weeks. Okay, next up are the Qs, looking at technology here. Pretty weak candle. We did bounce at that 618 retracement at 258.21. We are trading now under the 2018 COVID low anchored VWAP, under the 200 SMA on the weekly chart. So yeah, I mean, this one's looking pretty weak. I would say under 258, we could short this down to 251, and then under 251 in time, 229.02. That's right next to our 2015 low anchored VWAP. And last and see we'll take a look at for today is going to be IWM, your small caps. So we are making a bottom here potentially at 164.61, right on top of those 2016 anchored VWAP lows. I think this is a really good short under 164, I think for obvious reasons. So 152.47 would be the level that I would watch to the downside. Taking a quick look at the dollar index, this is ticker DXY. We are looking at a weekly time frame. Take a look at RSI back in 2015 on this run. This run right here, looking kind of similar to the run that we're having right here. And you could see we are coming into those RSI levels from 2015. So we're not quite over those levels yet, like we saw here and here. So we might have a little more juice to squeeze out of this lemon here. We're 114.73. This is going to be a prior high. And yeah, I think maybe we'll see a little bit of resistance coming into that level. But for now, dollar's still looking pretty strong. Taking a look at some sectors, this is KBWR. These are regional banks. I've noted this one for a number of weeks now, has been showing relative strength to the market. So far, 2 weeks green, we are trading above our 30-week simple moving average, and we're holding well above our 200-week simple moving average. Here are some of the banks that comprise the regional bank ETF. You can take a look at some of those names. But for this week, just looking for relative strength in the market. And to be honest, there's not that much out there on it. So we are holding over 50 RSI. We are crossed over on the MACD, but we did close below our swing high anchored VWAP here in purple. So keep in mind, we also have a bit of supply here anchored from that prior low back in the COVID low. So I'd say it has a little bit of work to do, but still from a relative perspective, showing relative strength. All right, next up, we're going to take a look at XLV. This is your healthcare ETF. Here are some of the top holdings. in this ETF. And what I was watching is 125. You could see support, support, support. We had a gap down, but quickly regained, right? And a little undercut there, quickly regained, but we lost it 4 weeks ago. And now it's acting as resistance on 125. So support, 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 now acting as resistance for 4 weeks. So if we cannot get back over 125.44, probably a good short down to 118. And under 118, I would expect a move down to the 200 SMA. Again, inverted hammer, spinning top. Over 125, you could see over time we move back up to 137. First, you got to contend with that 30 SMA. And we did have a squeeze fire, 3 dots to the downside, but not see the follow through on that move so far. But keep an eye on XLV showing a little bit of relative strength to this market. And the last sector we're going to take a look at is XLE. This is your energy ETF. Here are some of your top holdings: ExxonMobil, Chevron, ConocoPhillips. And for this week, RSI is starting to break out. MACD is curling up, but not yet crossed over. We are back over and back tested that 30 SMA over the last 2 weeks. What I'd be watching for, a move over 83.20. Get that move over 83.20, so take a look at some of these names, or you can play the ETF itself up to 93.31. Okay, that is the final sector that I'm going to be reviewing for this week. Now let's take a look at some of our top tech names. First one up is going to be Apple. You can see we're now 7 weeks under our 30-week simple moving average. I thought this was a pretty important candle right here. This was a bearish engulfing and also a double key close reversal. Closed under our support on the anchored VWAP as well. And we're coming down back to these prior lows that we saw back in April and May. So I think Apple under 133.38 is a pretty good short down to 118. MACD is crossed under, RSI is under 50. Next up is AMD. We did take this one short at $73 under the 618. This was a beautiful short so far for 3 weeks. We hit our first target at 63. We're coming down to our next target at 51. I would expect a little bit of a bounce here. This is a 1618 Fibonacci extension from this wave right there. And we have a bit of a demand zone down here. So, 50, 51, maybe we come into it, we start to bounce. I would see if we can get back over 63. If we can't, maybe we see another leg down. If we can, we'll probably come back up to $73. But we had a TTM squeeze fire to the downside. We are coming to oversold conditions. So I would expect a bounce at some time in the next maybe week or two, or maybe we see that bounce on earnings. All right, next up is Amazon. We did have a quasi Amazon Prime week, a 2-day Amazon Prime event happen this past week, but market pretty much like everything else, not liking anything. This one to me looks like a really good short under 104.28. You can see it move down to 100 and then potentially down to $89. And this one not looking too great. We did put a short alert out at 122, pretty good so far. But I thought we would see a little bit more support in this 122 to 124 fib region, and it just fell right through it. But you could see 2 weeks ago we did come into it, and it got nasty rejection. All right, here's CrowdStrike, which, to be honest, it had been showing some relative strength for a number of weeks, but last week just sold off. And we hit the center channel here on this falling channel. As long as we're contained in parallel lines, to me, this is possibly just a counter trend move with the prevailing trend being up, right? You can't go up forever. Maybe you have a bit of a wave here, like a 1, 2, 3, 4, 5, and maybe we're getting an A, B, C correction, maybe C wave down here, and then maybe we get that next move higher. But for now, just watching CrowdStrike. It's holding under that 30-week simple moving average for about 4 weeks now. I think if we get under 133, it's probably a pretty good short down to about $100. But maybe this comes down to 100, and that's our bottom we bounce. But again, I'm just looking at the chart, trying to look at it objectively, but I'm not trying to say what's going to happen in the next day, let alone the next couple of weeks. All right, taking a look at Datadog, and finally got that breakdown under 83.50. Very good short down to 75. Hit that target. Now I think the next really good short is going to be under $70, basically 70.19, anywhere between 69.73 and 70.19. Probably catch 5 points down to $65 right at that 786 retrace. If that fails, this one has a long way to go below. And so we do have a TTM squeeze setting up. Momentum is shifting to the downside. RSI failed at 50 and continuing to fall, not quite oversold. MACD is crossed under. All right, next up is Google. Google so far holding on to these recent lows. I think under 100, it looks pretty weak, but what I would watch for is a move under $95. If we get that move, the next level I'm watching to the downside is going to be 89.26, and it is going to be a demand zone and a 618 retrace. So watch that level. Keep in mind, we are 3 weeks fired to the downside, holding under 50 RSI. Next up is Meta. This has been one of my top shorts over the last, I would say, 5 or 6 weeks. We did put a short alert out at 155. We're aiming for basically 2 targets, 142 and 123. We hit both those targets within a few weeks. Now, what I'm looking for is under 123. I'll move down to 106. We were showing some signs of positive or bullish divergence. That looks like it might be negated. MACD looks like it might want to cross under. We don't have any squeezes, but this one's still in free fall. Next up is Microsoft. This was a new short alert that I put out last week. We did get a nice push down initially right to our demand zone, and that bounced right back up. So if this holds under 225, then I think it's still a pretty good short. But if we get a weekly close over 232, then we might see a bit of a reversal. But yeah, what was really good about this short, we've failed at a long-term trend line. I mean, long-term, like, well, I think it was like 8 or 9 year trend line. So we had that squeeze fire to the downside. RSI not quite oversold, and MACD is crossed under. Next up is Nvidia. Chip stocks definitely weak. You could see this one was in parallel lines, and now over the last few weeks falling below it, which to me signals just a defined trend to the downside and not a counter trend move. And so, it's pretty beaten down. So I would be very careful shorting this. But under 109.80, I think we could see a move down to 100 and potentially in time down to $79. We are 5 weeks squeezed to the downside with a fire, and we are just coming to oversold territory. Keep in mind, when stocks are oversold and overbought, they can remain so for a number of weeks. So this is not indicative of a reversal signal. But when you do get oversold, you tend to get some short-term pops. So just watch this level here on NVIDIA. Next up is Shopify. Fake this out. I had this short under 2968. It retraced last week or 2 weeks ago into my short level. I stopped out of that short. And of course, we continued to the downside. So I did not take it short again. Why I stopped out of it for basically, we have a flat squeeze setting up, and we had bullish divergence both on MACD and RSI. So I just wanted to protect my downside. Plus, we have not retraced back up to this 30-week simple moving average. So, but yeah, I mean, it still looks like a pretty good short. I would keep a close eye on Shopify to the downside in the coming weeks. All right, here's Snow, which had been, like CrowdStrike, showing some relative strength. We finally broke down last week under 167. That was basically my key pivot level, and we had some really big 5-6% sell days on Snow last week. So yeah, it doesn't look too great right now. You can see the squeeze momentum is starting to shift to the downside. So this is starting to look like a pretty good short here. So I think a short under last week's low is pretty good, targeting 126 to the downside. And last but not least is Tesla. So yeah, Tesla, another one coming down to that 209 level here. We did close below it, so this is looking pretty weak. We are a bit well, actually, we're not oversold technically, but these 4 weeks are pretty nasty. We haven't seen a sell-off like that since these 4 weeks here back in 2021. So we might get a bounce on Tesla this week. Maybe it comes down to 200 and bounces. But I don't see a great trade here yet on Tesla. I think we gotta wait maybe another week or two before we see some good setups on Tesla. So anyway, that's my weekend review of my top sectors and top tech charts going into next week. Like I said, if you like this content, please subscribe to my channel and like this video below. And I hope to see you on another video shortly. Take care.